Today, we're tackling Amazon's first quarter results for 2025. We've got the official earnings release, the conference call slides, basically the raw data from May 1st.
Yep, the source material.
And our mission really is to sift through all of this and pull out what actually matters. What are the key takeaways from how Amazon performed?
Exactly. It's more than just reading the numbers. It's about understanding the story they tell about where Amazon is and, where it might be heading.
Okay, let's jump right in. The big picture, net sales. They hit $155.7 billion.
Which is up 9% compared to Q1 last year.
Solid growth. But there's that currency factor, right? If you adjust for foreign exchange.
It's actually 10% growth, which, suggests the underlying business momentum is maybe even a bit stronger than that headline 9% shows.
Right, because those global exchange rates can kind of mask things sometimes.
Definitely.
And then operating income, also up $18.4 billion this quarter.
Yeah, compared to $15.3 billion in the same quarter last year, a decent increase.
But the number that really jumped out at me was net income. It went way up.
Oh, yeah, $17.1 billion.
Which is, what, $1.29 per share compared to $10.4 billion or $0.98 per share last year? That's quite a leap in profit.
It really is. And it suggests, it's not just about selling more stuff. They must be getting more efficient, maybe controlling costs better, or perhaps certain segments are just much more profitable now.
Yeah, that makes sense. So let's break down those segments. North America, their home turf.
Right. Net sales there grew 8%, hitting $92.9 billion.
And the operating income in North America also climbed a bit. $5.8 billion, up from $5.0 billion. Seems like steady, solid performance.
It is. 8% growth in such a huge, mature market, it's still pretty impressive. Shows they can keep finding ways to grow domestically.
Okay, now let's look internationally. Net sales increased 5% there to $33.5 billion.
But again, that currency effect.
Right. Take that out. And the growth is actually 8%, same as North America.
Exactly. It really highlights how much those exchange rates can swing the reported international numbers. The underlying growth seems quite consistent across regions.
And operating income internationally saw a slight increase too, right?
Yeah.
$1.0 billion from $0.9 billion.
Just a small bump, yeah. Still profitable, but not the massive engine North America is. Or
AWS, perhaps. Let's talk about Amazon Web Services.
Now there's the big growth story. Net sales up 17%.
Wow, 17%. That's $29.3 billion just from AWS.
And look at the operating income, $11.5 billion. That's up significantly from $9.4 billion last year.
So AWS is clearly still a huge driver, not just of revenue, but massively contributing to the overall profit.
Absolutely. That 17% growth just underscores how essential cloud services have become. Businesses keep moving to the cloud, and AWS is, a primary beneficiary, and it seems they're very profitable doing it.
Okay, shifting gears a bit. Cash flow. How's money moving? Operating cash flow, looking at the last 12 months.
Increased, up 15% to $113.9 billion, which is healthy. That's cash from the core business.
But then, free cash flow. For the same trailing 12 months, it actually decreased.
It did, down to $25.9 billion.
Compared to, $50.1 billion in the previous 12-month period? That's a pretty substantial drop. What's going on there?
Well, remember, free cash flow is operating cash flow minus capital expenditures. So a big drop like that usually points to one thing.
They're spending a lot more money on stuff.
Pretty much. Investments. And the report confirms it. Purchases of property and equipment, net of sales and incentives.
Okay, how much?
$88.0 billion in the last 12 months.
Whoa, okay. And the previous year?
$49.0 billion.
So they nearly doubled their spending on property and equipment in a year. That definitely explains the free cash flow dip.
Absolutely. They're investing heavily. Think data centers for AWS, warehouses for e-commerce, maybe transportation logistics, maybe even these bigger projects like Kuiper. It's a massive outlay.
So less cash left over right now, but presumably because they're building for future growth.
That seems to be the strategy, yes. Betting big on infrastructure and expansion.
Right. Let's talk about some of the specific things they highlighted. Alexa Plus, a new AI-powered Alexa.
Yeah, bundled free with Prime. They're saying its next-gen AI can answer more complex questions, actually do more things for you.
That could make Alexa much more central to the smart home, potentially. Keep people sticky with Prime.
That's likely the goal. Make Prime indispensable, not just for shipping, but for, daily life assistance.
They also mentioned successful sales events, big spring sales, spring deal days, Ramadan sales, saving customers over $500 million.
And Prime Day is coming back in July, number 11.
So these big discount events are still a major lever for them.
Oh, absolutely. Drives volume, attracts new members, reinforces the value of Prime. It's a core tactic.
Another big investment number, $4 billion to expand their rural delivery network in the U.S.
Yeah, aiming for faster delivery outside major urban areas.
That seems like a direct shot at improving competitiveness against, say, Walmart or Target, especially in areas where Amazon delivery might have been slower.
Exactly. Closing that delivery gap makes them a much stronger option for everyone, everywhere. It expands their addressable market significantly.
And internationally, they launched Amazon.ie in Ireland. Dedicated site, local Prime.
Makes sense. Deepens their European presence, allows for more tailored offerings for Irish customers. It's that continued global push.
We're also adding more brands like Michael Kors, The Ordinary, and even Saks on Amazon. Luxury stuff.
Yeah, broadening the appeal, moving upscale with Saks, adding popular mid-range brands. They want to be the place you buy everything.
It really seems like they're aiming for that total retail dominance across all segments.
That's the long-term play, it seems.
And they're using AI to help with that, this interests feature for product discovery.
Right, generative AI to help you find stuff you might like even if you weren't looking for it. Personalization is key.
It feels like AI is becoming deeply embedded in the shopping experience itself.
For sure, making it smoother, more intuitive, maybe driving more impulse buys too if it surfaces the right things.
They're even letting you buy stuff from other websites through the Amazon app now, like links or a Buy For Me feature.
Yeah, that's interesting. It positions Amazon less as just a store and more as like the central hub or browser for all your online shopping, even if they're not the seller.
Keeps you in their ecosystem, gathers more data.
Potentially, yes. It's one to watch.
Okay, switching to some of the big tech bets. Project Kuiper, their satellite internet. They're starting full-scale deployment.
They are. Moving from prototype to actually building out the network. Huge long-term projects starting to become real.
And Zoox, the self-driving tech, expanding testing to LA.
Los Angeles is a complex environment. It shows they're serious about pushing autonomous driving forward despite the challenges.
And then there's content, a joint venture for the next James Bond film.
Yep. Plus, ongoing success with shows like Reacher on Prime Video, and they mentioned the LeBron James podcast on Wondery doing well.
So content is still vital for making Prime attractive.
Absolutely. It's a key part of the bundle. Keeps people subscribed.
Back to AI, but on the AWS side, Amazon Nova AI models, Sonic, Act SDK, Premiere. Sounds like they have a whole suite.
They do, and they're seeing rapid growth, rolling them out globally. It shows AWS is really pushing hard on providing enterprise AI tools.
Competing directly with, Google, Microsoft, Anthropic, OpenAI.
For sure, and they're landing big clients, Adobe, Uber, NASDAQ, sign new deals with AWS.
And launching tons of new AWS services, Outposts, racks for telecom, new foundation models in Bedrock.
Yeah, Claude 3.7 Sonnet, models from DeepSeek, Meta's Llama 4, Mistral. They're adding options constantly.
Plus updates to SageMaker, Amazon Q, and QuickSight. It's a lot.
It really is. The pace of innovation in AWS, especially around AI integration, is relentless. They have to keep moving fast in that space.
And one more future tech thing, Ocelot, their first quantum computing chip prototype.
Yeah, focused on error correction, which is a huge hurdle in quantum.
Very early days, but signals they're looking way down the road at potentially game-changing tech.
Definitely a long-term R&D play. Shows ambition beyond the current tech landscape.
Just quickly touching on a couple other points, they got ranked high by LinkedIn for career growth.
Number 2 in the U.S., yeah. Good for attracting talent.
And they continue to report progress on safety in their operations, reducing incident rates.
Which is important both for their workforce and, frankly, for operational efficiency and reputation.
Okay, let's look ahead quickly. Their guidance for Q2 2025. Net sales expected between $159 and $164 billion.
Which translates to, 7% to 11% year-over-year growth, so continued growth expected.
And operating income guidance is between $13.0 billion and $17.5 billion. That's a fairly wide range.
It is. Could reflect some uncertainty about the economy, maybe the ongoing impact of those big investments we talked about, or just general variability in costs and margins quarter to quarter.
Right. But that free cash flow story, just to circle back, seems clearly tied to that massive ramp-up in capital expenditures.
Exactly. It's investment spending driving that number down, not necessarily a problem with cash generation from operations.
And finally, they mentioned managing share count and stock-based compensation to limit dilution for shareholders.
Standard practice for a mature tech company, but good that they're highlighting it as a focus. Shows attention to shareholder value alongside growth.
So, wrapping this all up, Q1 looks like a story of strong top-line and bottom-line growth, especially powered by AWS.
Definitely.
But also a story of massive investment, pouring money into infrastructure, logistics, AI, even future tech like quantum and satellites.
Absolutely, they're not standing still. Investing heavily across the board, trying to enhance customer experience, pushing innovation. AI is woven through almost everything they mentioned.
The overall picture is, well, a juggernaut that's still growing and spending aggressively to secure its future.
That sums it up pretty well. Strong performance now, big bets on what's next.
So here's a final thought for you to chew on. With Amazon growing like this and making these huge, potentially disruptive investments, what does that really mean for the rest of us, for other industries, for the economy? What new changes or, I don't know, maybe even shakeups could these big bets trigger down the line? Something to think about.
It's a huge question. The ripple effects could be enormous.
Indeed. Thanks for digging into this with us today.